Hi, welcome to my monthly portfolio update. I hope you'll find this information useful, but please note that this is not investing advice. It's just my portfolio as it stands on Saturday, April 1st. It's not an April Fool's prank, and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful, since it's your own responsibility to do your own research before investing. Crazy month again in the market, starting with the collapse of the Silicon Valley Bank and the whole debacle that followed with Credit Suisse and the other banks, and then the sharp rebound that followed, resulting in a pretty good month overall. In Romania, we have a saying that roughly translates to "the dogs are barking and the caravan is passing." Not the most inspiring picture. Also, as a side note, we don't really have a lot of caravans either. However, the point is that the dogs are just making noise and basically doing nothing else while the caravan is passing undisturbed. So, following the spirit of the saying, I once again sold nothing this month and continued my dollar cost average strategy and bought some US tech stocks, namely Microsoft and Google, as well as some Romanian stocks, Simtel, the solar energy company that I mentioned a few times before, and the first entry on my 20 investment punch card list. Doubling down on the renewable energy bet, I also bought BVB, which is the Romanian stock exchange, which seems to be growing in terms of popularity, funds attracted, number of investors, and company listed, as well as showing some potential since foreign companies right now from our smaller eastern neighbor, the Republic of Moldova, wants to list on the Romanian stock exchange, which means more liquidity and more money made by the stock exchange. Last but not least, I also added MedLife to the watch list, which, if you remember, basically means buying under $100 of share. MedLife is a Romanian private medical service provider that is expanding rapidly by acquiring different smaller players in the market. While right now it isn't showing great profits because of it being in expansion mode, however, the healthcare industry being very inelastic, basically when you need medical help, you will pay as much as you can to get the best one. I think that at some point they will become some sort of a monopoly, or more accurately an oligopoly with the state-sponsored healthcare providers. And then they will start showing profits, but I'm not expecting it to happen anytime soon. However, it is still worth keeping an eye on it. As a disclaimer slash story, in January I got a really bad cold, the 2023 flavor of flu, which broke me and I couldn't sleep for 10 nights, and I bought a personal yearly subscription to the MedLife medical system, and they actually gave me some pills that made it better. So even though I think they have too few doctors for the number of patients subscriptions that they have right now, it's still a good business model which can get better. In terms of cash flow this month, I received only a small quarterly dividend from my S&P 500 index, and when I say small, I mean really small, which again, money is always nice, but it didn't help much with my cash position, which we will see in the portfolio allocation, where cash and cash equivalents went down quite a lot. Speaking of cash positions, this is my current portfolio as of April 1st, 2023. Overall, the active managed portfolio is up 2.42%, 2.40% since last month, and the full pyramid portfolio is up 5.43% since I started the channel in January 2022, so 50 months or so, and up 4.40% year to date, which is nothing to write home about, but I am happy with the performance in these uncertain and volatile times. Also remember that these numbers are discounting my cost of living, which is not really that high, but the overall gains are more. You can also see at row 14 the new entry, the MedLife ticker, which is M. Next, let's look at the allocation pyramid, which is as follows. you can see some monthly variation. The biggest thing is the fact that we have a 0.75% increase in growth stocks, driven mostly by the Fed starting to add money to the balance sheet to save the banks, as well as the sudden pop in Alibaba caused by the news that they will split in 6 different companies. So, overall a volatile but profitable month. My cash cushion is slowly deteriorating, minus 0.75% this month alone, but in the period between May, July, maybe August, I should be able to rebuild it a bit, since then is when most of the dividends are paid. If you like this video so far, please don't forget to like and subscribe. It really helps getting this out to more people. I'm also curious how your portfolio performed this month and if you have reached profitability yet. Now, let's talk about today's bonus topic. Most people are in a hurry to get rich and trade options before even reading a company's financial statement, so I wanted to share the story of Berkshire Hathaway's third partner, the one that nobody heard of. Like them or hate them, most people have heard of Berkshire Hathaway's investing duo, Warren Buffett and Charlie Munger, billionaires, icons in the world of investing, with the Berkshire annual meeting competing with Burning Man and the Comic-Con in San Diego as popular meetup places every year. As well as a constant fountain of knowledge, they will always remain in history as outstanding value investors, with their success spanning many decades. However, did you know that in the beginning there was also a third, and at that time considered as good a value investor as the duo, that was also part owner of Berkshire? Chances are that, even if you are a fan of Warren and Charlie, you never even knew they had another partner at the beginning of their investing journey. And the name of that partner was Rick Gehring. By all accounts, at a moment in time, early 1970s, he was by no means considered inferior to Warren or Charlie. So, why no one heard of him then? The answer comes from another super investor, Monish Pabrai, friend and bridge partner of Charlie Munger and an acquaintance of Warren's. He won with his friend Guy Spears in the 2007 the Buffett Lunch, which is a charitable event for which they paid a small sum, about $650,000 15 years ago, so you have to take inflation in consideration, which is almost as much as I spend on beer every month. Wink wink. Anyways, Monish leads Pabrai investment funds and shared the private conversation they had once, and I quote, "So I asked Warren, are you in touch with Rick, and what happened to Rick?" And Warren said yes, he's very much in touch with him. And then he said, and this is the important part, "Charlie and I knew that you would become incredibly wealthy." And he said, "We were not in a hurry to get wealthy. We knew it would happen." He said, "Rick was just as smart as us, but he was in a hurry." And so, actually what happened, some of this is public, and it was that in a 73-74 downturn, Rick was levered with margin loans. And the stock market went down almost 70% in those 2 years, and so he got margin calls out the yin-yang, and he sold his Berkshire stock to Warren. Warren actually said, "I bought Rick's Berkshire stock at under $40 a piece," and so Rick was forced to sell his shares, because he was leveraged. So, are you in a hurry to get rich and taking wild risks doing so? We saw this month that volatility is crazy high right now, so any leverage position you might have either way might wipe you out. If you are leveraged long, the bank panic would have wiped you out initially, and if you were leveraged short, the recovery afterwards would have wiped you out also. So, the idea is to own good companies at a reasonable price, which allows me to sleep well at night. As Charlie Munger once said, there are 3 L's to avoid in investing: liquor, ladies, and leverage. That's it for today. Again, if you like this video, please like, comment, and subscribe. It doesn't cost you anything and it might help spread this message to other interested people. See you next month, hopefully richer than this month. Have a great day. Bye.